Hello, my name is Wenner. I'm the founder and CEO of DLP Capital, talking to you from St. Augustine, Florida, where I call home and is headquarters to our organization. But it's not actually where we began. I started the company over 18 years ago where I grew up in Lehigh Valley, Pennsylvania, and we started as a residential real estate agent and with a business focused on providing solutions to homeowners. And that quickly evolved into a business focused on providing solutions for those in need of attainable or affordable housing. And that's what we've been doing ever since. Over 18 years now, we've made over $11 billion of investments into housing that is and will remain affordable for working families. We've developed and acquired more than $5 billion of attainable housing, and we've made nearly $6 billion in loans to other developers, builders, and operators focused on providing housing that is affordable for working families. But at DLP today, our goal is more than just providing attainable housing. Our purpose is to transform lives through the building of thriving communities, which starts with attainable housing. This clear direction, this purpose, this calling to my life has led us to really consistent, incredible growth that I'm really proud of. We've been one of the 5,000 fastest growing companies in America now for 12 straight years, leveraging a system we built called the Elite Execution System that allows us to generate consistent, repeatable results day in and day out and scale the impact, scale the size of the organization, scale the number of residents we get to provide housing to, scale the number of investors we get to serve and steward their resources. And it's been a great joy, but we know we're just getting started. Our mission is to change the nation through the building of thriving communities. Our big, hairy, audacious goal is to become one of the 100 largest private companies in America through positively impacting more than 10 million lives. And that's centered around providing housing that is and will remain affordable. Despite the $11 billion of investments we've made over the past 18 years, the nearly $2 billion of investments we're going to make this year alone, despite the fact that we have over 500 team members at DLP focused on executing on a business strategy around providing housing that is and remain affordable, despite all the efforts, despite all the progress, despite all the work we've done over the past 18 years, the problem across this country has only gotten worse. It's only gotten more difficult, only become more challenging. Today in America, homeownership has never been more out of reach than it is right now. The median mortgage payment in America today is around $3,000 a month. The median mortgage payment today is nearly twice what it was 4 years ago. To afford a median priced home in America today, you need a household income over $106,000. Only 13% of the homes on the market today are affordable for the incomes of the average working family. All this means more and more people have to rent, are staying renters longer, are going back to renting, putting more and more demand for rental housing that is and will remain affordable. And that's the core strategy behind what we invest in. We also invest in first-time homebuyer housing as a lender, providing capital to other great home builders and developers, but at the core of what we do is providing rental housing. Rent certainly hasn't gone down. Rent certainly is not affordable today. The average rent today in America is about $1,850 a month, but that's about $1,200 less than the average mortgage payment. The gap between how much it costs to own a home and how much it costs to rent a home is greater today than it's ever been. Yet, for the first time in history now, more than half of Americans are spending more than 30% of their gross income on rent. That's thought to be the threshold of affordability. When your rent is more than 30% of your gross income, you end up having to sacrifice basics of healthcare, education, food, and now more than half of Americans have passed that threshold of affordability. And what we invest in is housing that is or remain affordable. Our average rent is about 25% of the income of our residents, about a quarter of the income, or in other words, affordable. And that's a big important part behind our investment thesis, behind our focus of providing attainable housing, housing that is or remain affordable for working families, for teachers, police officers, social workers, throughout the communities we live in. No matter where you're at in the country, it doesn't matter where you're dialed in listening to this, I guarantee affordable housing is a problem where you live and a growing problem where you live. Each one of us, maybe it's not us individually, but our children, family members, friends of ours are struggling to be able to afford housing wherever it is that you live, wherever it is that your family or friends live. It's a major, major problem we face in this nation today. Providing housing that is or remain affordable is where it begins. We know that attainable housing is just the start. We've developed a framework of 10 elements of a thriving community. Attainable housing is one, access to capital or banking, investments is another. Deep relationships and community is another really important part of what we do. Neighbors serving neighbors, residents serving residents, people having real relationships with one another is an important responsibility of what we look to do throughout our investments. 30 years ago in America, the average American had 3 close personal friends. Today, the average American has 1.5 friends. Very seldom is that 1 or 2 friends located in the physical community where the resident lives. Very seldom do residents in rental communities today have actual friends, real relationships with the community. Somebody whose door they could knock on and that person would be willing to take in their kids for the night, and they'd be willing to trust that neighbor to watch their kids for the night. I believe in the statement, it takes a village to raise a child, and that could never be more true than it is today. We need real community. 84% of Americans today say they're not connected to their local community. 72% of Americans today are disconnected or disengaged at their jobs. And 94% of renters across America today are unchurched. They're not connected to a church. No wonder we have a loneliness crisis, a tremendous amount of depression and unhappiness across the country today. We have a lack of connection and relationship, a lack of connection and relationship with each other, a lack of connection and relationship with the Lord. And these are elements of a thriving community we focus on bringing to our communities, to each of our residents, not just the communities we own, but the communities we make loans on, invest in, the sponsors that we support here at DLP Capital, the other developers, builders, and operators. And we know that that focus on loving on our residents, providing them with support, building real community and real relationships, not only is the right thing to do, not only allows us to have an incredible impact, but we know it also increases our profits. It increases our returns to you as investors. We are impact investors here at DLP, but our strategy around making an impact on the lives of our residents is not at all in conflict with generating great returns. In fact, it actually increases the returns. Because when residents stay in properties longer, our focus is having our residents stay in our properties for over 8 years versus the industry average of a little over a year. That means we have lower vacancy. That means we have lower turnover costs, lower maintenance costs, which means higher occupancies and higher income. When residents can actually afford their rents, guess what that means? They can actually afford their rents, which means they can pay their rent, which means lower delinquency, higher collections. When residents love where they live, they stay there, they refer their friends, they write great reviews, we attract more renters, higher occupancy, in some cases even higher rents. All of this translates into higher net operating income or higher profits to our investors, which is why we've generated double-digit returns to our investors in every year across every fund, especially in our funds where we own the real estate directly. We've generated significantly higher returns than the targets of the funds, and this focus on building thriving communities is a big part to why. Speaking of our investment opportunities, today here at DLP, we have 4 different investment vehicles that are available to investors. 4 investment vehicles that provide investors double-digit returns, that provide you with regular distributions, that provide you with liquidity, provides tax shelters, and always puts our investors first. Each of our 4 funds are evergreen open-ended funds, meaning these funds will be open and we'll be operating them 3 years from now, 5 years from now, 10 years from now, we expect. Each of these funds put investors first. You get a preferred return on your investment, depending on the fund, which I'll talk a little bit more about, of 6 to 9% before DLP earns any profits or even earns a management fee. All of these funds are private REITs, providing a different set of tax shelters and benefits depending on the fund, but all of them providing unlimited qualified business income deduction, which means you're taxed at a 20% lower tax bracket than if it wasn't essentially a private REIT. So the 4 funds, I'm going to walk through them here briefly, and then we'd love the opportunity to talk with you more, talk to you about each of these funds, talk about which one could make the best sense for you, for your available capital, where we can be the best steward to you. Each of these 4 funds are available for qualified investments, retirement accounts, and cash as well. First fund I'll talk about is called the DLP Lending Fund. This is our fund that makes senior secured first position mortgages to professional full-time real estate developers, builders, and operators. We've been running this fund for over 10 years. We've generated double-digit returns every single year with all of the distributions paid out monthly, actually 2 distributions each and every month. We've had over 5,000 loans originated, over 5,000 loans paid off, never writing off $1 of principal or interest on a single loan ever. And we've generated over double-digit returns in every period with 90-day liquidity. Then we have the Preferred Credit Fund. The Preferred Credit Fund is our second lending fund. This fund does everything I just talked about with the DLP lending fund, but it also and largely does make subordinate or mezzanine loans. This allows us to be very competitive with the very best developers, builders, and operators across the country, earn a little bit higher returns, and in turn, provide you with higher returns. We expect a 1% to 2% higher return in the lending fund, 9% preferred return that gets paid to you before we make anything, with 90-day liquidity and all the income paid out on a monthly basis. And then we have two funds that don't make loans, or primarily don't make loans, but actually own the real estate directly. The first fund is called the DLP Housing Fund. This fund owns over 13,000 rental housing units that are affordable for the residents who live in those properties, the 40,000 residents who live in those properties today. In this fund, we target a 10 to 12% return. We've generated over a 19% return since we launched the fund annually, with monthly distributions, annual liquidity. And to date, we've been able to shelter all of the income from tax while you're investing. And then finally, we have the Building Community Fund. This is a fund that invests equity into building brand new housing communities, single family rental communities, multifamily communities, brand new communities that are affordable for working families. This fund has an 11 to 13% return target. We think as we look ahead over the next few years, this is the fund that will generate the highest returns. 8% preferred return, again, that gets paid to you before we earn anything, with annual liquidity. All four of those funds are open today, available to investors, in addition to our fixed private notes where you can get a 9% fixed return on your investment. So if interested in learning more about how DLP operates, about the impact we're making in the lives of residents across this country, about the investment vehicles and how they could be a fit for you and your investment portfolio, and how we can also help make a difference in your life, make an impact through the education, the events, such as our big impact and legacy event we have coming up. We'd love the opportunity to do so. We'd love the opportunity to chat with you. Love to see if what we offer can be a fit for you and your goals. We appreciate the opportunity and look forward to get to know you in the days, weeks, months ahead.